Hey everyone, welcome back. Now, is it possible to invest in a stock and have absolutely no downside risk, which means that I cannot lose any of my capital? Is it possible? Yes. What are the downsides? What are the upsides? How do we set it up? How do we track it? I'm going to go over all those things today. Let's get into it. If this is your first time here, remember to click that subscribe button down below. My name's Levi Woods. This is Drawbridge Finance. This isn't financial advice in any way, shape, or form. It's just the type of trade that I do in my account. Now, this trade is dead simple. I'm going to buy 100 shares of a stock. I am going to combine that with a married put and a call ratio spread. It sounds complicated, but it really isn't. I'm going to show you the exact setup. 4 trades altogether, no loss from this trade. I am rolling this perpetually in my account and it is working very successfully. Okay, we're going to take a look at the platform. The stock that I'm trading today is Visa. I'm going to show you how to set it up from the very outset, and then I'm going to show you how I would manage a trade and roll it out and track it in my rolling options record keeper. So step 1, how do we set up the trade? We are looking at October 17th, which is 57 days out. Now I'm going to show you something here. There are some very small butterflies that you can put on for an extremely cheap, very low risk, very high reward, and that's what we're looking for. So one of the first things I want to do is determine the valuation of where I might want to place my butterfly. Now, currently, I'm looking at investingpro.com. One of the cool features about this is it has a fair value indicator on it. So currently the stock's trading at 343. Fair value calculation is 334, which is 2.8% lower than current price. Now, these butterflies like to be set up very close to at the money. So at the money would be 345 on a $5 wide options chain. Let's take a look at the chain. October 17th, 57 days from now, where would I center my butterfly if I was to build a call butterfly? Now, we all know that would be 345 would be the center of the butterfly. If we were doing at the money, 343.72. Because investing.com is showing that it's slightly overvalued, what I'm going to do is actually place the trade a little bit lower, not a massive amount lower, but I'm going to center at 340. And what I'm going to do is I'm going to try to do a 15 wide call butterfly. And I'm going to look at that cost. So my shorts are going to be at 340. I'm going to buy the 325. That's 15 points lower. Then I'm going to sell the 340, 2 of those, and I'm going to buy the 355. This is a very simple setup. I'm just going to go down to the strategy builder. I'm going to click on 2. We're going to show you how to set that up. Now, this costs a debit to open. And currently, if we take a look at that, the potential loss on this trade is whatever I would pay. So if I could get into this for say 330 bucks, I would have $330 in total risk, and I would have the potential of making $1,100. Pretty awesome risk to reward ratio. Now, I want to try to get one that's a little bit cheaper, so I'm going to go a little bit tighter. I'm going to tighten this butterfly up, and I'm going to see if I can buy a slightly cheaper one. So I'm just going to drag these legs. We're going to see in here. Now I can put this on for under $200 and I can still make up to $763. The profit probability is only 22% because it's a very small little triangle, but there's a massive potential return. I could literally make up to 3 times the amount that I'm risking. So 3-to-1 risk reward if it was to pin on October 17th at exactly 340 a share, which is not what I'm expecting. Now, the cool thing about this is that based on current interest rates, we can actually convert this to a trade that has absolutely 0 risk. So how do we do that? The first thing I'm going to do is I'm going to change the lowest leg of the butterfly, which is the 330 long call. I'm going to change that to a put. And you're going to see that change on my chain here. And we're going to see the dramatic difference of the profit profile. All of a sudden, this looks a little wonky. This trade has a delta of negative 102. So it's a short delta trade. How do I neutralize this? How do I create it back into a butterfly? Well, what I can do is I can click on the advanced tab and I can choose add stock leg. This means I'm going to be buying 100 shares of Visa. Now, this makes this trade relatively costly. To enter this today, it's going to cost me around $32,950 to put on this trade. Now, the cool thing about it is that I own the 330 put, which means that even if Visa was to drop to zero, I could get back 33,000. And since I'm paying less than 33,000 to enter, all of a sudden you can see this is a lossless trade. I have a 100% probability of making money on this trade. The risk, of course, is that I don't make very much money. So let's say I was able to get into this trade for 329. How much would I actually make? Well, my minimum profit on the trade would be $100. So that's what a calculation I'm going to look for. I'm going to pull up my calculator and I'm going to say, what happens if I make $100 return divided by $32,900? What is that from a percentage? Well, it's 0.003. Now we divide that by 57 days, which is how many days we have on this. And it would be this amount per day. We times that by 365 and we'll get a percentage return. So 1.9% return on capital. Obviously I'd have to times this by 100 to get the 1.94%. So therein lies the risk. If I buy it, I collect dividends off of Visa. Currently, the dividend on Visa is 0.69%. And I also, on the option trade that I've just shown you and how I set it up, I could make an additional 1.9%. So I'm looking at like a 2.5% return at minimum. So if this is what I want to do, what I'm hoping for is that Visa trades inside of this tent and I can make substantially more. Let's take a look at the rolling options record keeper and I'm going to show you how this trade manages out. So I'm going to show you what has happened because this has been a winner at this point. Now, my trade right now, if I was to close it, it's worth 34,194. 34,194. I've been in this for 128 days. If I was to take this off, right now, my profit, if closed today, has been $1,000 in the last 128 days. This is expiring next month or next week. I have the August 29th position on it. I have butterfly centered at 350, stocks trading at 343. It's a zero loss trade. And I'm currently in this red tent. So if I was to look for something, I want the stock to be trading inside of the red profit tent. And you can see the first trade that I put on back in April, I was centered at the 340 for July 18th, and I wanted the trade to stay in the blue tent. So what I'm doing is I'm kind of chasing it around. Well, what if I was to close it right now? If I was, my profit return so far on this trade has worked out to $1,000 on an initial capital outlay of 32,000, of which I added another 772 to convert that butterfly over to the new profit profile. Even though I was reducing risk, I had to add some money. In this adjustment that I'm going to do today, I'm actually going to be getting some money back. So it's kind of interesting how this plays out. I don't actually sell the shares off. I just keep those all the time. And I'm going to put in the current price today, which is 343.93. That's the price it's trading at right now. I'm just going to choose custom from my drop down. I don't have this trade pre-programmed into my RORK. In row 16, there's a formula in here. So these 100 shares copy from the previous function. I'm going to look at what my option expiration date is. It's going to be October 17th. And again, what am I building? I'm building out the 330, 340 times 2 and the 350. So on the long put, we're going to put in 330. Then I'm going to put in the short calls at 340, and then 350. So I'm building a $10 wide butterfly. Now, this is a roll for me. This is not new entry. So what does that look like? Well, let's look back at what I have open right now, and you'll see how I roll this position. So I go to August 29th, and you can see my current butterfly. So I have to sell off the 335 put, buy the 350s, and sell the 365. Now it's not going to let me do that because I still have this stock in here. So in this case, I'm going to delete the stock leg and I'm going to sell this off. This gives me my 6-legged trade. So I am closing my current butterfly. See, I have one position long that I'm selling. I have 2 positions short that I'm buying 2 of. I haven't actually entered that. So we got to change that value right here. I'm going to go to 2 and then I am selling off this 365 call. The 365 call is not worth very much. I may consider not taking this off at all. I may leave it on. But what it's going to do is give me a credit. So I am going to do a net credit for this trade, and the credit is going to be at the minimum $1,209 that I'm going to be getting back. It could be up to $1,367. I want to get as much as possible when I do this position. So let's say I was able to get $1,300 in here. I'm going to put 13 in here, and you're going to see that we have now increased the potential minimum return on this trade. So now $1,120. Now that's if I can get this. I'm going to do it live right now. This is a live account. I'm going to show you exactly how I do this. I'm going to go to that 1,300. Start a little bit higher than that actually. I'm going to go to 1,330, and because I'm trying to get close to the mid price, and I'm going to hit submit. I'm just going to open up my active positions here, change the price of this. I go 310. Now I'm being pretty aggressive because I am doing this live, and I'm going to move these at an increment. As I get closer, I will slow down on my increment change. But for now, I'd like to get as much as possible. IBKR is pretty good at filling these, even on a 6-legged trade. So I was able to get 1271. I'm going to program that in to my rolling options record keeper right here. I'm going to put in 1271, and then I'm also going to record my commissions. Now the commissions are relatively cheap. This one cost me $3.90. So I'm going to put in that negative 390 in the commissions field, and we're going to see that that has all been entered correctly. And now what I'm going to do is I'm going to look at this position. Worst case scenario, 1,091 divided by my total debit, which the largest was 33,188. So 3.2%. We divide that by 185 days, and then times that by 365, and then times that by 100 to get the percentage return. So 6.48%. So at the very worst this year, plus the dividend that I'm going to collect from holding the shares, 0.69. So at the very minimum on this trade this year, I'm going to make 7.17% annualized. And I have the potential of making more as this stock moves around. Pretty cool setup. I've got a minimum return of 7.17% annualized, and I have the potential of making more than that, which is what I'm doing, which is absolutely fantastic. If you guys liked today's video, remember to hit the thumbs up button, subscribe if you haven't, and let's get rich together.